it's what we call, whatever you're getting in life, if it's not passing through you, it's just going to create what we call a confluence of, you're just going to be hoarding and harboring things. If you're getting money, it's not just for you. Of course, it's for you to be a blessing. If you're getting knowledge, it's not for you, it's for you to pay it forward. So yeah, today we're going to be mixing up our SMC strategy with a bit of trading psychology. The reason I feel very led to do that is because I understand that whatever we're learning, in all of our learning and understanding that we're getting, we need to be able to match it up with pretty much our mindset. And the mindset that we match it up with actually helps us with the success that we're able to see in the things that we're doing. So I kind of made some notes while preparing for this session today, just for us to understand that this particular concept of CB and BC is a part of of the SMC strategy, but it's also a subsection of how you decide to implement the SMC strategy. Part of the SMC strategy includes the fair value gap. And if you decide that you want to trade the fair value gap, then you have to know exactly what these two concepts mean. But before I begin to break down the BC and the CB, just as you can see here, I just wanted to share a few notes that I made, and I'm hoping that it brings a lot of value to you this morning. Of course, the video that was played this morning was so much in line. I was listening to it and I was laughing because it was completely in line with everything that I had made a note to share with you today. Understanding that a win or a loss is not a function of an error that you made. It's always a function of your trading plan or lack thereof. So whether you win and you lose, you have to be able to understand that that's the probability the market is always going to give you. The outcome, I'm sorry. But it's not because you made an error. It's always because you put a plan in place and that plan played out exactly as you wanted it to, or you don't have a plan and things are just happening and you're not able to kind of take proper data to be able to plan for the future. So another thing I want you to be able to take a note of, which I'm hoping that we all have our journals, build your personal relationship with the chart. And when I say personal relationship, it's basically adapting your strategy according to your understanding of the chart. Chairman just dropped a news this morning that these trading calls are no longer going to be free, and the trade calls are no longer going to be free. For some people, that's good news because they're ready. But for some, I know for a fact that they might not be able to hop in with that transition when it happens. But now, what will keep you going if you're no longer able to come here and learn for free? Is the relationship and the understanding that you have of the charts. I recommend that you set your strategies along with your trading plan. What does that mean? So understanding the charts means that you're able to understand what every candle is telling you as a story. Please, let's know this. All these candles, they're telling you what is happening. They're showing you the footprint of the market, every single candle forming. And basically, you cannot cram the candle and say, oh, one candle they said is doji candle, is engulfing candle, is hammer candle. Great, that sounds really grandiose and exciting. But do you really understand why it's called those names? The reality of the matter is those names were given by someone based on their own understanding. You can actually give each candle your own name based on your understanding of it. That means you know exactly when it's dodging, what it's doing. So you can name it Aisha candle. Because now you say, okay, when Aisha shows up, this is what Aisha is doing. And that will help you determine or develop a personal connection with the charts. So no longer will you have to depend on someone else's say-so to say, go here, go left, go right. You can get on the charts with amazing confidence and you can look at what's happening and determine entry, exit, and all this good stuff. All right. So some of the things that I use, of course, some of the strategies that I use within the SMC as a main strategy for me is doing my top-down analysis to determine, of course, entry and exit. Of course, the FEG gap trading plan is also part of it, using the fair value gap as a trading strategy as well, and then using support and resistance. The reason I broke it down that way is because depending on what is going on in the market, I can kind of move through those 3 sub-strategies within the SMC to determine what I want to do in the market that day. Because the market is full of probabilities. We're speculators. It doesn't give you one road to heaven or one road to eternity type of deal. It gives you what it gives you. So you have to be able to stay flexible, keep an open mind, but have within your trading plan the proven strategies that you will adopt whenever you see a certain opportunity or you see different setups on the chart. Now, of course, like I said, every candle tells a story. So you have to be able to understand that. The last thing that I want to share, the second to the last thing, is treat every encounter as an investment. This is you coming in here. I've had a lot of personal things happening to me that happened to me in the month of August, and I was not able to trade. But guess what? For me, I understood that, okay, that means that my business is on a hiatus. So my mind was very okay. I was fine with just putting that to the side so I could handle the things that needed my attention in the moment. Because this trading thing is not a gamble, it's not let's just go there and see what's happening. It is an actual part of my business plan. So I was able to kind of put it to the side. Now that I'm back and fully present and able to attend to the matters of trading, now I pick it back up and pick up my trading plan and begin to execute accordingly. Understanding that every single day I show up here, every encounter I have with this platform is for me to be able to move the needle forward in my business. So now that allows me to be able to have a strong mindset towards it. And it has also helped me in the short amount of time that I entered this business to get rid of what we call FOMO, fear of missing out. So like yesterday, of course, this week has been a good week for us. But if you were not able to participate, you might be beating yourself up and thinking, oh my God, I've missed out on the best opportunity of my life. No, you have not. You've missed out on great opportunity. Yeah. But guess what? There are better opportunities coming through because like we know, the market will give us what the market will give us. And the best days are still ahead of us on this market. Yesterday or 2 days ago, we hit a record-breaking high, another higher level in gold. So you can see that this particular thing is not something that we can kind of just look at and just say, okay, that's the best that's going to happen. We have to be able to take it the way it comes and just be able to understand that, okay, even if I miss this today, then something else is going to come up for me tomorrow. All right, so now we're going to jump into the lesson for today, trading the fair value gap using the BC and the CB. BC means the buyer side imbalance and the seller inefficiency. The buyer side imbalance and the seller inefficiency. CB means seller side imbalance and the buyer inefficiency. Both of them work in tandem. It's just an opposite of the other. It just means that depending on the direction of the market, then you can determine if it's a BC, which is if it's the buyers that are making their impulsive move and now the sellers are nowhere to be found. And then the CB is when the sellers take over, and the buyers are nowhere to be found. So the bulls and the bears. So today I have been given the task to address the bears. Yesterday, Mr. Ime Akpan did justice to the buyer side of things. So let's look at what the seller side looks like when we are trading the fair value gap. We do this by, first of all, when you see an imbalance in the market, the first thing you need to do is, I want to expand my chart a little bit. Let me just, so that way I can give you a good view of the candles, because I'm going to be taking this based on the candles. Okay, I hope everyone can see the candle. If you can see my screen and you're very, very clear with what you're seeing, type a 77 in the chat so that way I know that I am carrying everyone along with me. Please type a 77 in the chat if you can see my candles. All right, So this is my trading view platform. This is where I come and analyze, and then I go and place my trade on Trade Locker. And I'm currently now getting into learning how to use MetaTrader. I started out with Trade Locker. Now I'm getting into MetaTrader as well. So on this screen here, you can see a lot of things. Of course, I have my indicators. They are right there. And of course, I can take them out if I really don't need them. And I also have my tools, my preferred tools. You can make sure that your tools are on hand because it makes it easy for you to do your analysis and to read your chart and to pull tools, so you don't always have to go searching for them. So once you identify your preferred tools, just put a star beside it, and that way it's right there on your screen whenever you need it. So we're going to take the Sibi analysis and understanding how to trade it on the fair value gap using these 3 candles. And I'm going to try to name them. Let me use my brush. So I'm going to pick up my brush right there. And these are the 3 candles that I am using right here. 1 here. 2 here. Okay. Sorry, my 2 is not drawing well for me. I don't know why. Sometimes this stuff, okay, it's there. And this is the 3rd one at the bottom here. Okay. All right, cool. All right, let's just see where these marks are. So here you see the first candle is here. Let me see. Let me remove that. All right. So let me take my horizontal. Okay, yeah, this is my vertical line. So I can show you where I'm starting from. Okay, good. And then that's it. So this is where I'm starting from. You see where the vertical line is sitting. So right here on this vertical line is where we're starting from. This is not a very big impulsive move, but it's an impulsive move that gives you a fair value gap. And it shows you a fair value gap because you can see that the market really started making a downturn on this candle. Let me move this candle here. This was the deciding candle, this green one right here. This was the candle that gave us a warning that this downward trend was going to start. This is where the change of character was kind of initiated, where my line is. And then, of course, you see, once the next candle formed, it gave you additional indication. And by this one right here, of course, you know that it was in full mode about to go in the seller's direction. So that is why we're going to use these 3 candles as our subject for today. So now when you look at a fair value gap and you're trying to understand the seller side imbalance to help you identify your fair value gap space, you're going to use the 3 candles that are showing you the most amount of imbalance. So number 1, number 2, number 3. But out of the 3 candles, your number 1 and your number 3 are the most important. Those are the ones you really need to focus on. So I'm going to take my marking away from number 2. So you're going to need to focus on number 1 and number 3. If you want to use this as number 1, that's fine. We can use this as number 2 and then number 3. But I'm going to use this candle right here. Let me put another vertical line on my number 1. Here we go. There we go. And then, of course, my number 3. The reason is because my number 2 shows a longer body. That means the body of the candle is longer, showing that impulsive move going down. Now, number 1 and number 2 is important because at the base of number 1, that is where you see that, okay, let's mark the base of number 1. And then let's mark the top wick of number 3. The top wick of number 3 is where you're going to mark it, and that is what is going to give you your zone for your fair value gap. I'm sure like you guys have seen, you know, from the past few days, we had a few imbalances show up in the market. So now those imbalances will definitely be corrected eventually, but we just don't know how soon they'll be corrected. So now that we've marked the base of our number 1 candle, And then we've also marked the top of our number 3 candle. This middle space in here, sorry, I have the free version of TradeView, so it's always popping up ads. Okay, so I'm going to now draw this in here. Let me draw in here. All right, so in here is our fair value gap, this zone here. So this is what we have to work with. So now when you want to take a trade and you've identified this, so far so good. Is everyone clear on the markings? Is everyone clear on what I'm working with? So my number 1 candle is here and my number 3 candle is here. So I marked the base of the wick of my number 1 because those 2 spaces tells you that they are not connected. And whenever you see a lack of connection between the candles, automatically a fair value gap has been formed. I went a bit further back in the chart so that way we could see this without the indicators that play out on the other side of my chart. So here is what we're looking at. So this is where your fair value gap is. So if you're looking to trade your fair value gap based on this, and of course, everything goes down, you see that your number 3 candle actually got all the way down to 3367. And then there was a bit of a range in between, and then it went further down. Let's look at this other imbalance here as well. There's another fair value gap, and I'm going to use this second example just to show you that the candles do not have to be the same color. That means they don't have to be all bearish candles. They could also be a combination of bullish and bearish candles for you to identify your fair value gap. So now my number 1 candle is going to be this green candle. So at the base of this green candle right here, I'm going to put a horizontal line. So that's it. Now we're going to find my number 3 candle. This is number 2, which is the long body candle. And then the number 3 candle is this one right here. So I'm going to put another line at the top of my number 3 candle.
Motion detected at front door.
Uh-oh, Alexa, it's too early. Okay, so here we go. Let me just take another one. All right, here we go. So this is another example. Don't worry, I'm going to clean it out so that way we'll be able to see a clean chart. But let's just look at these examples. So now for this second example, I identified another fair value gap based on another impulsive move further down into the bearish side. And right here, my number 1 candle was a bullish candle. That's what we call a fake out candle. So someone who is new to trading might see that and be like, oh, finally, there's a reversal happening. Let me jump in for a buy. But usually you really have to wait to confirm. So this fake out candle was green. So the buyers tried to get in the market to correct the imbalance, but you can see they didn't go too far. And then the bears pushed them back down. And then the impulsive move continued again. That's why you have this long wick. And then the third one moved further down. But when you take the bottom of the first candle, the top of the third candle, it gives you another fair value gap that formed in here. So let's mark that area as well using our rectangle. So there you have it, guys. This is what we call a Sibi. Or like, of course, we're identifying the seller side of things today. So this is how you identify your Sibi. Whether or not there's indicators for you to work with or anything, you should be able to look at your chart, understand what is going on, and be able to identify what areas opportunity exists. And opportunities exist in these areas. So if you are the person who's saying, okay, based on this fair value gap, I'm going to trade that, you have to be able to mark those areas. And once you mark those areas, now you can look at, well, what is happening in the market after all of this has happened? How do I actually take advantage of this? It's just going to be a matter of you being able to do what we call the waiting game. So like, chairman would tell us he's waiting for a setup. Let's see if our entry or if price action hits the point that we're trying to hit. These are some of the things that he's probably looking at on the chart to see, based on this fair value gap, is the price going to tap back into the space? And if it taps back in here, then that tells us that, okay, the market is retesting this zone, and then we can actually try and wait for it. And if we wait for it to get there, then we can see about getting into a sell or buy based on the direction of the candles at that point, or how it breaks the barriers. So here, not only do you have a fair value gap, but you also see that based on the lines that I drew, I also set up what we call a support and a resistance. So now you have your support and your resistance, and that allows you to be able to determine, okay, if the price breaks beyond the resistance, then you know that now there is going to be a change of break of structure and change of character or something like that. So you can determine the next action you want to take based on that speculation. And if price taps into this zone to retest through the fair value gap, but then it pushes back down, then you know that, okay, there's going to be a continuation of the trend that was already set up in the market. I don't want to jump into that area today because I really want us to understand these concepts in bite sizes so that when we put everything we've learned this week together, it begins to make sense for us to know, okay, from top-down analysis to fair value gap to support and resistance, how am I able to independently take my trades, or how am I able to now begin to understand the chart? When Chairman asked about, how trading has been for us this week, I saw someone say, oh, it's a 6, but I have been learning a lot. You are in the best place. Whoever that person was, I don't remember, but I just want to say congratulations to you, because if all you've been doing is just learning and taking all those concepts and consolidating it into your arsenal, you are in the best position to becoming a professional trader, because that's where I'm at. I want to learn as much as possible. No matter who's teaching, I come here, I sit down, I learn, I look, I take notes, and then I go back and then I consolidate that knowledge by finding additional resources on the academy to help solidify my learning. And then I implement immediately. That's my own strategy. And that's why, like I told you, in August, I had a personal life issue. I couldn't do anything. I couldn't trade. I could not get on the charts. I couldn't do much. But when I came back now in September, I'm just like getting back, like riding a bicycle. You haven't ridden in a while, but once you learn, you never forget. And I'm like, okay, let's pick back up where we left off. Let's continue to learn. Let's continue to build. Let's continue to grow. So everything just was like, okay, picking up and going and moving forward. I did not experience much of a gap in my learning. So that's what we need to keep doing. So let me recap before I hand it over to my amazing partner, Mr. Ezekiel, what I've taught you guys today on the Sibi concept. BC is the buyer side imbalance. For those of our wonderful Wealth Hub members who don't understand what that means, it's not somebody's name and it's not something like that. BC is when there's a buyer side imbalance, meaning they take over the market, they come in hard, and the people who actually make these imbalances happen are the institutional buyers, the institutional people, the banks, the big companies, the Fortune 500, Fortune 100s, the multi-billionaires of the world, the Elon Musks, the Donald Trumps, the people who actually have the financial capacity to move the market in one fell swoop. And then we, the retailers, we kind of just see where they're going and we just run after, we follow them. He said, follow pressing where no road. That's why we all come here, we listen to Chairman, because he knows what he's doing. He's gathered over a decade's experience in this. So when he tells us there is a trade and opportunity, we take it as gospel and we all go home smiling. So with the institutional buyers, when they show up, they push the direction of the market. And you as a retailer, your job, your one single job is just to sit down, look, observe, understand what your candles are telling you that they are doing or trying to do, and then you act accordingly. Trading is not where you come to make up your own expertise. It's just where you come to actually learn skills that allows you to be able to know what the market is doing or trying to do, so that way you can go in that same direction. That is it. Now, Sibi is the seller side imbalance, which is the opposite. So when we look at BC yesterday with Mr. Ime, we saw the upward trend, the long candles going up. Now today we're looking at the downward trend, the red candles going down. Both of them are the same, and it's pretty much, it doesn't really matter because you can trade either up or down. That's one thing I learned. The first thing Dr. Dupe taught me is the market goes in 3 ways. It goes up, down, or sideways. The best place to trade is when it's going up or when it's going down. When it's going sideways, that is the time for you to just wait and observe. A lot of traders get locked into the ranging zone, which is when it's going sideways. And let me quickly talk about that. Because when you find that a price tests a particular zone too often, so for example, we had a CB moment or a BC moment, and we were able to get in and take a buy or a sell and ride the wave to take profit. Now, you'll see that, okay, once the price is getting back to retest a particular zone, for example, this fair value gap zone that if you see that it's ranging in a particular spot, and I learned this recently, and these are some of the errors that I've made that have actually affected me in the past, where I made that wrong decision to try to go back in to get more profits, which is the greed that affects all of us. That is just an indication that the market is about to start ranging and consolidating. So that is not a time for you to go back and want to double down on profits. That is actually a time for you to take your profits that you've earned, sit back, relax, and wait for another really good setup. Because if you fall into the trap of consolidation and ranging, you might be there for a long time, and then you might end up just losing some of the equity that you have secured before. So just as a note for everyone, if you notice that, okay, you've taken your position and you've had a good price action and it has gone in the direction based on your analysis and you've taken profit, sit back, relax, and wait for another really good setup before you jump back into the market. Because if price continues to retest the zone, that is an indication that there is a consolidation about to happen. That means buyers and sellers are now in the market struggling for another position of imbalance. And the institutional buyers are waiting for some of us who are retailers who will jump in that space, and they will turn us to suya meat, liquidity. They will turn us to their own profit. And once they're ready, and the buyers or the sellers win, or once they decide what direction. In fact, I realized one thing, that once the institutional buyers really is not two sides, it's not a side of buyers and sellers. They are just institutional, period. They just decide what direction they want to go, whether they want to push the market down or they want to push it up. And once they decide what they want to do based on their own profit margin and their own price or whatever it is they think they're trying to achieve, then we get to sometimes become part of that sweep for them, and they will sweep us down or sweep us up. So try to avoid some of these pitfalls as you are implementing the fair value gap strategy for your entry and exit points. So yeah, so that's it for me. The time is 4:51. So I'm going to hand it over to my wonderful partner, Mr. Ezekiel, or if anybody has a question, please feel free to raise your hand and I'll be happy to address it very quickly for you. So that's it for CB, seller imbalance and buyer's inefficiency. Thank you so much, Wealth Hub. Mr. Adam, good morning, sir.
Good morning, Dr. O. How are you?
I'm very wonderful. How are you, sir?
Good to have you back.
Yes, sir. Yes,
sorry, just for clarification, you marked the first fair value gap up and then this second one. Yes,
Yes,
I
sir.
had the one your cursor is, no, the other one. Yes. So my concern is that why did we not wait for price to maybe mitigate this second one and go to tap into the other one before we start selling?
Oh, that is a really good question. And that question is for everyone. And thank you, Mr. Adam, for bringing that up. So right now, we're not even trying to wait for price to mitigate. Of course, if you are actually trying to trade the fair value gap, you will definitely do what Mr. Adam said. And what he's trying to identify is, based on this first identification of this fair value gap, this second one might not be necessary, because you can see how close it is to the first one. So you want to wait for the market to recover back up here before you start deciding to take a trade. But Mr. Adam, this was for the purpose of helping people to understand that you can actually identify FEG and CB and BC regardless of the candles. So this first set that I did here was with red candles, all three of them, 1, 2, 3, right? The base of the first one, the top of the third one, to identify. And then this second one was to also identify the same concept using a mixture of candles. The base of the green candle, which is the fake out buyer's candle, and then the top of the red candle, which was number 3 here. So people can understand that fair value gap does not just happen when you have the same candlesticks showing up. That is red, red, red. It can be any candle, because again, the market is doing what it's doing. We were just there to see what it's doing and then make a decision appropriately in accordance with where the market is taking us. So now a green candle can show up because buyers will suddenly want to, come bullish and try to change the trend. But depending on their strength and their numbers, the bears are also there to say, no, we're still wanting to push this down. So, but either way, both of them have the ability to create opportunities for us as retailers to now see where to put our order block, or to see where we can wait for the entry, or to wait for our entry points. So waiting for price to tap into this fair value gap, and then seeing, okay, once it taps into our 50%, then you can try to see whether you're going to take an entry for the continuation of the trend, or if it breaks through that, then you know that, okay, there is a change of character that is happening and there's a swing, then you move accordingly with the swing as well. I hope that helps to clarify that, sir.
Thank you. I also hope others also learn from that question.
Of course. You're an amazing leader.
You.
Yes, sir.
Thank you so very much, Dr. OJ. Please,
yes.
Everyone, celebrate Dr. OJ, fire emoji, put value, fire emoji, love. If you're a lady, send kisses. The men should send those big blows that shows bosa. Thank you, Dr. OJ. I'm super excited. You can see while I muted myself, I was just smiling. And when I'm smiling like that, too much value, too much impressions, and too much learning. I've learned new things. Dr. Idem, see now, I called you Doc. Dr. Idem, you are waiting for the fair value gap at the top. Wait for it. I would have finished taking my profits here. So you wait for the other one.
Opportunities
I was actually laughing.
Opportunities abound every day. Some people just